Yeah, we're in the first innings of a very painful downturn, but I don't care because all paths lead to Bitcoin. So we could overthink it and trying to define what the outcome is, or we could just sit back and say, I don't care. Either way, you need to own Bitcoin. Bitcoin appears to be risky, but the appearance of risk versus true risk are two totally different things. Okay. So I actually believe Bitcoin to be incredibly unrisky. In fact, I believe Bitcoin is insurance. And since it's insurance against the fiat Ponzi, I advocate everybody needs to own some Bitcoin.
Amidst economic uncertainty and potential meltdown, former hedge fund manager and Bitcoin strategist Greg Foss has shared his investment strategy for making the best of available opportunities. According to Foss, the global economy is facing troubled times, and investors need to make wise decisions by utilizing available opportunities. One of those opportunities is Bitcoin, which Foss describes as the best asymmetric trade he has ever witnessed. He believes that Bitcoin is insurance against the certain debasement and collapse of the fiat Ponzi. Foss recommends having as little as 5% of your total investment in Bitcoin with the other 95% in other assets to protect against potential losses. In a recent interview with the Understanding Macro podcast, Foss shared his insights on these and other interesting points.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Just understand some of the risks that come along with owning a hard asset that's a house. So all of this is to say everything changes with your age, your income, your family responsibilities, your personal risk tolerance, and your lifestyle desires. But don't own zero. Look, if you own zero Bitcoin at any age, you are doing it wrong. Okay? You're exposing yourself to more risk than if you actually had X% of your portfolio in Bitcoin. And generally, for the non-believers, go and get 5% of your portfolio in Bitcoin. I know it sounds like a lot, but it's not. You still have 95% of your portfolio in other stuff. And this 5% could literally go up 100-fold from here, which means that 5% turns into 500%, everything else being equal. That's beautiful. That's asymmetry. Asymmetric returns define careers or return opportunities define careers. So I have a price target on Bitcoin of over $2 million US per Bitcoin in today's dollars. I got to be real clear about that. In today's dollars. That's a pretty decent friggin' return opportunity. It is a hard asset, so you know with 100% certainty that the fiat will debase. Right now it's acting as a risk-on asset, but I believe over time it will act as insurance, and as insurance it actually becomes a risk-off asset. But this is part of the learning process in markets. All of which is to say, yes, let's play these two outcomes. Bitcoin can either be worth zero. I don't think that's even an outcome that would happen, but let's just, to make the math easy, a binary outcome, it's either worth zero or $2 million US in today's dollars. I'm going to tell you, I'm about 50% confident in my price target. In fact, I'm higher than that. But to make the math easy, let's assume I'm 50% confident or a 50% probability. You do what's called an expected value calculation, and you say, okay, 50% chance it goes to zero, 50% chance it goes to 2 million, 50% times 2 million equals $1 million in today's dollars. And my expected value outcome is $1 million. What are you supposed to do? Hello,
take the bet.
McFly, if you've done your math and you believe in your math, yes, you take the bet. It's like going to a horse track where you've watched a horse train, and just like this year's Kentucky Derby, they laid 100-to-1 odds against that horse winning. And you're like, damn, these odds are wrong. I've watched this horse train. Now, I'm not 100% certain he's going to win, but I'm way more certain than 1 in 100. So what do? You go and you take that bet. And the guys that took that bet made out like bandits because they did smart risk management. Governments can't stop it. Adoption is increasing. Education is increasing, not just with Bitcoin, but how foolhardy our fiat system is. We still haven't talked about the regional bank crisis in the USA. This is why Bitcoin was designed, people. Okay? Bitcoin was designed in the last great financial crisis, 2008, 2009, 14 years ago. for the next financial crisis, which is now.
In his interview, Foss addressed some common criticisms of Bitcoin that have arisen since its inception. While the cryptocurrency has caused concern and controversy over the past 14 years, there have been efforts made to understand its underlying network and its potential as a viable investment opportunity. However, some of Bitcoin's loudest critics have not made similar efforts to understand the technology or the cryptocurrency itself. One of the main criticisms of Bitcoin is that it lacks intrinsic value and is not backed by any tangible asset. Additionally, some argue that if the value of Bitcoin continues to rise as proponents predict, people will be hesitant to use it for transactions, which would undermine the idea that it could become the world's reserve asset. Foss offers his perspective on these criticisms during the interview and also identifies other investment opportunities beyond Bitcoin.
If they understand the internet, and they'll probably say no, and then ask them if they use the internet, and they'll probably say yes, and then you say it's the same thing, okay? You don't need to understand how Bitcoin works in order to appreciate how valuable it is. Is the internet valuable? Yes. What's it backed by? The network. Is Bitcoin valuable? Yes. What's it backed by? The network. Okay, it's exactly the same thing.
How do you have economic growth if there's no incentive to spend the currency?
Okay, that won't happen because there's a price for everything. First of all, if you choose to own Bitcoin and not eat, you're going to die. So you have to actually spend some Bitcoin to eat. Okay, and then you can say, well, I can pay someone to do this to fix my house. I'm not able to fix my house by myself. And I'm going to use Bitcoin because why? Well, the utility of me paying someone to fix my roof in my house is better than living in a leaky house and having all my Bitcoin, but not, living comfortably. So it's like anything, Brian. Prices will rise to marginal utility, marginal cost, where they intersect. You remember Economics 101? Doesn't matter what the unit of account is. Those two things will intersect and a transaction will take place.
What other opportunities do you see out there at the moment? I know.
I like hard assets. So I own gold. I own silver. I own oil. I own real estate. My biggest exposure is real estate. It's a lifestyle thing. I have 3 kids. We have a house. Shame on me, but yeah, we have a house. Like, that's just the way it works. We have an investment property in the United States where we rent an investment property, but we spend some time there. That's a good investment. Neither of them are portable. If I have to move to El Salvador, these are going to go for sale at fire sale prices because you got to get out. You know what I mean? Yeah. So this is why you have to balance portability, transferability, scarcity, all the things that make Bitcoin beautiful. And you don't have to have all your assets in Bitcoin. I think we've laid out that scenario pretty well. So don't own zero. I mean, again, for anyone who listens, okay, please do some work. And you're not going to get this right away. It's going to take you some time. But understand how flawed the fiat system is, and then understand how beautiful Bitcoin is as a solution. Now, Bitcoin is the only digital asset that solves it. Ethereum is a proof of stake, centralized fiat asset, okay? Ethereum is exactly like fiat. But Bitcoin is not controlled by anyone. There's a fixed supply. Ultimately, it is the solution. It's the only digital asset that solves the fiat Ponzi. So be careful what you invest in and understand that Bitcoin is not crypto. Bitcoin is a standalone asset class within the crypto asset space.
Bitcoin has surpassed the $30,000 mark, a significant psychological range that could indicate the start of a bull market. This is the first time since June 10, 2022, when Bitcoin fell sharply due to the widespread contagion from the Terra Luna collapse. As of the time of this video, Bitcoin is priced at $30,136, which represents a gain of 6.54% in the past 24 hours and over 80% year-to-date. Popular technical analyst Gareth Soloway stated in one of his recent videos that he would change his bearish sentiments if Bitcoin stayed above $30,000 for a few days, which could confirm that the 15,500 FTX low was the bottom for this cycle. Please share your opinions on Foss's interview and Bitcoin price predictions in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.